I was checking the stock chart a lot, refreshing it, but it was up 245% at the open. The shares opened at 95 yuan a piece. They were priced at 27.46 yuan a piece last week when SMIC priced and started opening the books to investors. So it's an absolutely huge jump here. And look, it's a very significant moment for the company, but also China's broader ambitions here, because China's really pushing its domestic homegrown industry, and SMIC as the biggest contract chip maker in China is a key part of that strategy. It's also important because SMIC needs to invest a lot of money in terms of the capex. It's raised about $6.6 billion from this share sale, so it's going to reinvest that into trying to catch up with some of its rivals, the likes of TSMC and Samsung as well. So very important moment, I think, in a bigger scale here, particularly as we see those tensions ramp up between China and the US as well. So I think it's a big jump. It's something, no doubt, that the company will be very happy about, but also I suspect the Chinese government too.
Yeah, and Arjun, if you could, one reason we were doing a double take on that number, 245% higher, is because even at the listing price, questions had been raised about valuation, about the price to earnings ratio relative to some other competitors who do a great deal more business in this space. So what have you been hearing in terms of what others think about this valuation?
Yeah, well, if we looked at the Hong Kong shares this year, they're up over 200%. I think the PE ratio is somewhere over 100 at this point, 109, something like that. So it's absolutely massive. I think one of the things that the analysts are saying about this company is, look, this is very much a long-term play. As I mentioned there, what we have seen is, look, China and the US tensions ramping up. We've seen those sanctions against Huawei, which aims to cut it off from chips supplied by TSMC. So I think a lot of people think, well, where is Huawei going to look next? A natural company to look at will be SMIC. Now, it's moved over a very, very small portion of its very low-end chip production to SMIC, and the problem for SMIC, it's very far behind when it comes to the technology and the processes of creating even smaller chips versus the likes of TSMC and Samsung Electronics as well. So the problem for Huawei is, even if it wanted to move some of its chip production, it couldn't at the moment. And so that's why I think you're seeing this play here. People are thinking, the market's thinking that this is long-term when it comes to China's broader chip ambitions.